Some observers from time to time say that the stock market is a forecaster of events to come. Can you predict, or would you care to take a look at what you think this might be forecasting, the decline?
The stock market has been a good forecaster from time to time in the past. It also has been a rather poor forecaster occasionally. For example, the last 4 or 5 years, the stock market has been booming along and presumably forecasting better business, which has really not materialized. Corporate profits are not any better than they were 5 years ago, but stock prices are 50% higher or thereabouts. So maybe the stock market is really correcting a previous incorrect forecast this time rather than making a new correct one.
Well, in a nutshell, Mr. Buffett, can you give us your opinion on just exactly what happened, what caused it?
Well, there was undoubtedly some forced selling the week when the stock market hit the news. The previous week, prices had declined about 6% for the week on average. And there was some stock that was forced upon the market both by margin calls from brokers and some that was forced out by improperly secured bank loans. And this in turn set up a self-generating
don't lose. And the second rule of investment is don't forget the first rule, and that's all the rules there are. I mean, if you buy things for far below what they're worth and you buy a group of them, you basically don't lose money.
Warren, what do you consider the most important quality for an investment manager?
It's the temperamental quality, not an intellectual quality. You don't need tons of IQ in this business. I mean, you have to have enough IQ to get from here to downtown Omaha, but you do not have to be able to play three-dimensional chess or be in the top leagues in terms of bridge playing or something of the sort. You need a stable personality. You need a temperament that neither derives great pleasure from being with the crowd or against the crowd, because this is not a business where you take polls. It's a business where you think. And Ben Graham would say that you're not right or wrong because 1,000 people agree with you. And you're not right or wrong because 1,000 people disagree with you. You're right because your facts and your reasoning.
All we're trying to do is try and find businesses we think we can understand, where we like the people running them, and where the price makes sense in relation to the future economics. And when I find that, I like to buy a lot of it and keep it. And they're hard enough to find that I don't believe in selling them very often, because it's hard to find replacements. Are we over here now? Yeah.
Mr. Buffett, how do you know when to sell a business, and when is it time to do that?
Well, the question about selling a really great business is never, because to sell off something that is a really wonderful business because the price looks a little high or something like that, it's almost always a mistake. And it took me a long time to learn that. I haven't fully learned it yet, but it's rare that it makes sense if you really believe that the long-term economics of the business are terrific. It's very rare.
You will find opportunities as you go through the next 20, 30, 40, 50 years. And frankly, you're most likely to find them when in periods like 5 years ago when we were having the panic. I mean, stocks sell at silly prices from time to time. Most stocks at one time or another sell at very silly prices. And it doesn't take a high IQ to figure out that they're cheap, but it does take a temperament that's willing to step up and actually act. I tell people, if they're going in the investment business, if you got 160 IQ, sell 30 points to somebody else, because you won't need it. I mean, I figured out very early, you don't have to be that smart in this business, which is fortunate, but you do have to have the right temperament. And you have to be able to ignore what other people are saying and simply look at the facts and decide, is this stock which is selling at X worth 2X? And occasionally you'll find things like that. And when you don't find them, you don't do anything. I don't know where I'm going to invest next. That's what makes my job interesting. Wade. You don't have to be right about thousands and thousands and thousands of companies. You only have to be right about a couple. I met Bill Gates on July 5th, 1991. We were out Seattle, and Bill said, you've got to have a computer. And I said, why? And he said, well, you can do your income tax on it. I said, I don't have any income. Berkshire doesn't pay a dividend. He said, well, you can keep track of your portfolio. And I said, I only have one stock. I said, and he says, it's going to change everything. And I said, well, will it change whether people chew gum? And he said, well, probably not. And I said, well, will it change what kind of gum they chew. And I said, well, then I'll stick to chewing gum and you stick to computers, you know. I don't have to understand all kinds of business. There's all kinds of business I don't understand. But there's thousands of opportunities there. I did understand the Bank of America, you know, and I'll be able, I'm able to do that. I'm able to understand some given percentage. But Ted Williams wrote a book called The Science of Hitting. And in The Science of Hitting, he's got a diagram, shows him at the plate, and he's got the strike zone divided into 77 squares, each the size of a baseball. And he says, if I only swing at pitches in my sweet zone, which he shows there, and he has what his batting average would be, which is 400. If he had to swing at low outside pitches, but still in the strike zone, his average would be 230. He said the most important thing in hitting is waiting for the right pitch. Now, he was at a disadvantage because if the count was 0-2 or 1-2 or so on, even if that ball was down where he was only going to bat 230, he had to swing at it. In investing, there's no called strikes. People can throw Microsoft at me and, you know, you name it, any stock, General Motors, and I don't have to swing. And nobody's going to call me out on called strikes. I only get a strike called if I swing at a pitch and miss. So I can wait there and look at thousands of companies day after day, and only when I see something I understand and when I like the price at which it's selling, then if I swing, if I hit it, fine. If I miss it, it's a strike. But it's an enormously advantageous game, and it's a terrible mistake to think you have to have an opinion on everything. You only have to have an opinion on a few things. In fact, I've told students, if when they got out of school, they got a punch card with 20 punches on it, and that's all the investment decisions they got to make in their entire life, they would get very rich because they would think very hard about each one. And you don't need 20 right decisions to get very rich. You know, 4 or 5 will probably do it over time. So I don't worry too much about the things I don't understand. If you understand some of these businesses that are coming along and can spot things on, if you can spot on Amazon, for example, I mean, it's a tremendous accomplishment what Jeff Bezos has done. And I tip my hat to him. He's a wonderful businessman. He's a good guy too. But could I have anticipated that he would be the success and 10 others wouldn't be? I'm not good enough to do that. But fortunately, I don't have to. You know, I don't have to form an opinion on Amazon. And I did form an opinion on the Bank of America, and I've formed an opinion on Coca-Cola. I mean, Coca-Cola's been around since 1886. There's 1.8 billion 8-ounce servings of Coca-Cola products sold every day. Now, if you take 1 penny and get 1 penny extra, that's $18 million a day. And 18 million times 365 is 7 billion, 3 less 730 billion, or $6,570 million. So annually, $6,570 million from 1 penny. Do you think Coca-Cola is worth a penny more than, you know, Joe's Cola? I think so. So, you know, and I've got about 127 years of history that would indicate it. So those are the kind of decisions I like to make. And you may have an entirely different field of expertise than I would have, and probably much more up to date in terms of the kind of businesses that we're seeing evolve. And you can get very rich if you just understand a few of them and understand their future. But fortunately, I don't have to. I mean, if we go into Heinz, you know, and I look at people pouring ketchup on, you know, hamburgers and potatoes, I don't think it's going to change. You know, and the nice thing about it, some products travel, some products don't travel. Candy bars don't travel well. I mean, if you look at the Cadbury bars in England, they don't sell well here. And if you look at the Hershey bars here, they don't sell as well someplace else. Soft drinks travel, and ketchup travels. I like products that travel.
I guess.
No, I have said that it is a tax bill that was targeted in a big way to help corporations. So it helps Berkshire's million shareholders. It isn't what I would have done if I was going to have a tax cut. But so as an individual, I do not agree with the philosophy that led to it. But as a steward at Berkshire Hathaway, I have to tell you that it does our shareholders a lot.
You don't have to find very many. Very few. If you have 10 good ideas in the rest of your life, that, you know, you can afford to give away 5 of them. You'll get very rich with a very few good ideas.